guys, and we're back today with another video. And today I'm going to be going over the importance of the Asian session, or in other words, the Asian range. So first things first, I'm going to be going over why the Asian range is called the Asian session is called the Asian range. For the ones that don't know, Asian session is the least volatile session out of, I think there's four main ones, 4 or 5. The 3 main ones that you should know about are the Asian session, the New York session, and the London session. Those are the 3 main sessions that you should always pay attention to, because that's where all the action and all the price action that you need to be paying attention to happens at, and that's where all the volume, and where in this case the Asian session, where none of the volume is. So the thing you want to keep in mind is when you're marking up these Asian sessions, you want to be marking them up from 19 o'clock GMT to 3 a.m. GMT. Not GMT, this is EST, my bad. From 19 o'clock EST to 3 a.m., which is, I think, 6 p.m. to 3 a.m. in EST. I'm not sure about Pacific Standard, you could check that yourself. But this is the time session you want to be watching. And the indicator you could use, if you go to indicators and you just look up Asian session range, it will be the first one, this one, and you can click it, and then you could just have your settings set up like mine right here. I have everything turned off except for the Asian session, and then I just have mine delineated as an orange box. And then what do? I grab a rectangle, I'll mark it, and I'll just put this box just like this, and then I'll take the indicator off and I'll leave it at that. So now that we delineated the previous Asian session, we're going to go over why it's very important. So the reason it's very important is because since the Asian range tends to consolidate, this tends to be the daily consolidation. Let me say that again. The Asian session tends to make the daily consolidation. And understanding that the way the market moves, it moves in phases. There's consolidation phases, expansion phases, retracement phases, another expansion, or there's consolidation with an expansion, then a distribution. But it all starts with a consolidation. Every move starts with a consolidation. So if you can map out where the consolidation starts, you can map out where price is likely to retrace to, or where it's likely to reverse from. Because if you understand where price is at all times, you understand all your sessions, you understand where price is reaching for, aka where the liquidity is for that day, you're going to be better off trading. Okay, so next, since we already know what the accumulation is, the Asian session tends to be the accumulation phase of the day. Now we're going to pair this with our daily buys. So we're going to go to our daily time frame, and we're just going to go, let's just look at price over here. Since this is where the Asian session was previously, our previous day Asian session, going into the next day, what were we expecting? We were anticipating to have a bullish day. Why? Because the previous 2 candles were bullish candles, so the likelihood of the next candle also being bullish is going to be higher probability than it being a bearish candle, for say. Even though it can be a bearish candle, the likelihood of it being bullish is higher, and as you can see, it ended up being a bullish candle. So we understood that the bias was bullish. So now that we understand the daily bias, where price we want to see go, we will then pair that with the Asian session. Why? Because if you're intraday trading, this is how you're going to be mapping out your trades. In this case, this is all hindsight right here, but this is where the market closed, and this is where I was able to capitalize on trades from before. So for example, what were we expecting today? Not today, well, Friday. We saw that the Asian range was here. What did I do from there? I got my fib and I got the 50% mark, because the 50% of the Asian session is also it's the equilibrium to say, and it's an area where price is likely to have reactions from. And as you can see, if you pull that 50% all the way to the right, you can see it had reactions from here, pushed above it when we had this reversal at New York session at 9:30, down here, came up, closed under the 50%, started consolidating, slowly pushing up, started pushing up off it, and then it ended the day around that area. But you can see this area tends to have a lot of reaction. So what do we like to do? The main things I like to do when I'm using my Asian session range, I like to map out my daily trades. So understanding where the Asian session is, like we said before, we want to map out where price is likely to go. So if it's a bullish day, we're going to be anticipating possibly a push higher above the Asian session during London session. Why? Because after the Asian session, the next session is London. And since we know the Asian session tends to range, we have to wait for the next session to possibly have the volume. And that session is going to be London. So we could wait for London to have a push higher. Then we could wait for New York session to have its retracement. Why New York session? Because New York session has a high probability of being a London continuation. So just like this, Asian session consolidates, London session has this push higher, we have a retracement, make a low during New York to continue higher. In this case, that's not what we got, but I'm going to find examples of using this for you, because this was an example of a ranging day, if anything. So let's just go look for an Asian session. So what we're going to do, we're going to mark out our areas. So like I said, from 19 to 3 in the morning, right here, we're going to map out our Asian session. And from here, this will be our Asian session right here in this box. So I'm gonna just go all the way back from here, so none of that matters. We are going to look at this previous day case study. So this is the Asian session. What happened? London session pushed higher, broke these Asian session highs. Then from here, what did we do? Price continued to go lower. So looking at it from a schematic standpoint, price consolidated, came higher, had a retracement. Then what happened during New York? We had a retracement higher because price wanted to go even lower. So this is an example of having a New York reversal. What happened? Price had its consolidation. Right here, price had its consolidation. Price pushed up during London session, started pushing down during New York, had a retracement at 9:30. Then from here, what happened? You could have possibly pulled your fib right here, wherever you would have pulled it, had a retracement higher to go even lower to end the day. So this is an example of a New York reversal. If this was a example of a London continuation, this last leg wouldn't have happened here, and price would have more than likely continued to go higher. But in this case, New York session had a reverse, and in this day, we took out the Asian highs and the Asian lows. So this would be an example of a New York reversal. I'm going to find you another example of using the Asian session range to find London continuation moves. So this would be one right here. We're going to mark out the same times. So from 19 all the way to 3 a.m. right here. 19 to 3 a.m. Where is it? Right there. 19 to 3 a.m. This is our Asian session for this day. So we're going to do what we did with everything else. We're going to mark up the 50% because this is an area of high probability. I'm going to go back in time just for this day. And let's look at what happened. So I'm looking at what happened. This is what I do every single morning when I'm looking at my charts. I look where the Asian session is and I look what happened overnight. So in this case, this was our Asian session. Price during London session had this drop down. So looking at it from a schematic standpoint, price was consolidating, had a push lower. Then what happened during New York session? We had a retracement. Where did we have that retracement? We had that retracement. Here, I'm gonna use the box again. We had that retracement back to the Asian session low. And where did that happen? Right here. Right here. If you pull your fib, this is where we had the retracement back to the Asian session low, which you can see right here. Mind you, this isn't a so important resistance box, even though it might look like it. This is just a box going strictly off of time. Just going strictly off of time. Look at that. Strictly off of time, you can see price had a retracement to it. There's other confirmations in there, but I'm just strictly going over the retracement and had this London continuation. So London had its drop. New York session 8:30 had a push higher. 9:45 we continued that London session drop. So this would be a example of the New York continuation of the London move. The Asian session had its range. During London we had a drop. New York we came to retrace to continue that move. So this would be an example of that. The Asian session is a very important range, and I didn't start using it as much until recently. I always knew it was important, but I never got into the habit of using these to map out trades. I'm going to find you another example, and matter of fact, one right here is going to be an example of an Asian session manipulating both the highs and the low of this day. So just like that, got the Asian session low and the Asian session high of this day. We're gonna delineate the 50% of this Asian session right here, which you can see it had a very strong rejection. It was moving and consolidating in this 50% area of this Asian session. I'm going to go back this day just so we can see the price action. Now we're gonna look at what happened. So in this case, price was ranging throughout Asian session. Then when it came out, it was ranging even longer during the London session. But then what happened? Price manipulated the lows and came manipulate the highs before going even lower. This would be an example of having a day where price has another New York reversal. Why? Because price was moving, consolidating the whole time. We came, broke the lows, and it made it look like it was going to go higher during New York session. But what happened? In reality, price was really coming to get the liquidity that was resting above all these highs from this consolidation, grabbed all that liquidity before then bringing price all the way back down. That is what happened at the end of the day. And moves like this are going to be harder to catch because it's going to majority of the time stop you out before you can even see the move. Because as you can see, if you would have been trying to go long, you would have more than likely got stopped out by the move down here that came and broke the lows. And if you were trying to go long up here, you probably got stopped out from here. But if you would have been going off of the higher time frame, understanding the draws on liquidity, you would have knew that after we broke these lows at what you call when is this New York session, if price wanted to continue going down to have this London continuation, it would have never broke these highs. But in this case, these are going to be moves that are harder to catch, and that's just what it is. That's why every day isn't meant to be traded. And I'm going to show you guys more examples. For example, this is another example where that happened. Price, this is the Asian session somewhere here. I'm not going to delineate it perfectly, but the Asian session, price was ranging, dropped down during London session, had a push higher, dropped down again, pushed higher during the New York session, took out the highs before having a reversal. It's the same setup, same thing we did over here. We came, dropped, got the lows. New York had a push up before having the New York reversal. There's only a certain amount of moves that are going to happen. So I need you guys to pay attention to when the London highs are made, when the daily lows, not London highs, matter of fact, I need you to pay attention to where the daily lows and daily highs are being made. Because majority of the time, the daily lows and highs are being made during London session. And if they are made during London session, the likelihood of that day being a London continuation day are going to be more likely. Reverse that. Replay it. If price makes a high or low during London session, the likelihood is higher that New York will have a retracement to continue that London session trend. But you also got to keep in mind that if the lower the day or the high of the day is made during New York session, as you can see right here, the high of the day was made during New York, it tends to be a reversal day. And you can see it over here. The high of the day was during New York session, was a reversal day. Look down here, the low of the day was at New York session. What happened? It was a reversal day. What happened over here? New York session, it wasn't the high of the day and it wasn't a reversal day. It was a continuation day because London session was bullish. New York session had a retracement and it stayed bullish. What happened up here? Price was consolidating all day. Price made the high of the day during New York session. It was a reversal day. Oh, same thing over here. Price was moving up all London session. It made the high during New York session. Then it had a reversal. Same thing over here. The high of the day was made during New York session. Had a reversal because the London session was moving down all day. Pushed up, made it look like it was going to continue going higher, but then reversed. Then now we're going to look at examples where that doesn't happen. The high of the day was made during London session. It never came back up. and price continued to fall lower. So this would be an example of London continuation. Over here, the high of the day was made during London session, 2 in the morning. Never came back up, and it continued to go down all day. This would be an example of London continuation. The low of the day, down here, 130, was made during London session. This price was never broken through, and it continued to go higher during all day. We had a retracement during New York to continue going higher. I'm getting messages. Same thing over here. London session made the high of the day. New York session had a retracement. Never broke this high during London session. It continued to go down all day. You guys can look at this every single day. I'm showing you these examples. There's different setups you look for. Price is either going to have a London continuation with a New York retracement. Oh man, I can't spell for shit. Oh man. With a New York retracement, or is going to be a New York reversal, or is this going to be a consolidating or an inside day where price just consolidates all day. Those days happen, but these are the two moves you want to keep in mind. The daily range or just the daily candles overall are either going to be a London continuation followed by a retracement during New York session to continue that trend, or we're going to make a higher low during London session, then we're going to take those highs or lows out during New York session to then have a reversal. It's going to be hard to see these things, but that's why you have to delineate these open and close for each day, so you can watch each day and you can look at the price action that happens within each day, because you will start to learn and notice things that you never noticed before just with time. Understanding time and understanding the accumulation phase where the Asian session is at, you're going to learn a lot more than just looking at nothing. Because I've had many trades based off of the Asian session, based off of my higher time frame daily bias, and then when you put them together, you start to put a lot of things together and it makes more sense. When using these Asian session, you also want to use it best on the lower time frame. So I say 30-minute and under, because once you get to the hour time frame, it gets hard to really see what's going on. You want to use the higher time frame, the 4 hour, the 1 hour, the daily. You want to use all those to mark out your order blocks, your fibs, and all of that, and that's what you're going to be using the higher time frame for. Once you go down to the lower time frame, you're going to start mapping out where you would be looking to get into trades. You're going to be mapping out the Asian session. You're going to be looking for areas that price is likely to retrace to, where price is likely to target. The higher time frame is for the overall analysis, the overall trend bias, and then the lower time frames is where you're going to be mapping out your trades. So when you're mapping out your trades, you need to understand where the Asian session is, and you need to understand where you are at certain times of the day. So as you can see up here, down here, we had the low of the day made during New York session, and it was a reversal day. Look, this was the low created during London. Price came down, cleaned these lows before reversing. What happened down here? This was the low made during London. It was respected. Price came close to it during New York, didn't take it out, but then continued to go higher throughout the day. These are two setups right here. New York reversal, London continuation. They happen every single day. Some are going to happen repeatedly every other day. It might be a New York reversal 3 days in a row. It might be a London continuation move 3 days in a row. But you just got to train your eyes to start looking at it that way. So hopefully this was a little brief explanation on the importance of the Asian session range. If you have any other questions, if you have any questions that I didn't answer, make sure you drop a comment below so I can answer them. You just got to understand time and price is very important, and understanding what price is doing at certain times is very key, because trading is very simple once you're looking for certain things. As a matter of fact, before I end the video, let me just show you what these levels also. So these levels I have marked, these black levels are all of my 500 levels, my 800 levels, my 200 levels, and my whole number 2000 levels. And the red ones are just every 50. So you can see how price respects these areas. And when using this Asian range, you can see during this Asian range, this is the range. You can see price when it came up to these highs at, where is this? 34,850, respected it, had a retracement, came all the way back down to 34,700 to then continue back higher and then rejecting 34,850 again. And you can see these moves happening all the time. You can see when New York had that retracement, respecting this London low over here, came, respected 34,400, continued to push higher. Over here, when London had these lows and made, price came down and almost came back to this 34,000 level, but it closed above 34,100 and continued to go higher. Over here, you see these highs were made during London session. Price had a retracement back to 34,300, respected the London highs, and continued to follow that London trend. You guys just gotta see it for yourself. I know you're not gonna believe me until you see it. Try this out yourself and tell me how it goes. And that's gonna be it. Hopefully this was informative. Hopefully I taught you guys something that you didn't know. Just make sure you back test this and try it out yourself, because I know you're not gonna take my word for it. So you have to see it for yourself. Like, comment, subscribe, hit this button right here, subscribe to my channel, and I'll see you guys in the next video.